So hi again. Now I'll be talking to you about the advanced tax TDS credits and how that is used to set off against income tax liability, and what are the necessary accounting entries, and how are you going to treat these items in the balance sheet. So now the first one is advanced tax. So what is advanced tax? Advanced tax is nothing but a statutory compliance. That means it is mandatory for you to pay advanced tax provided the tax liability for the year exceeds 10,000 in case of India. So now it varies from country to country. So this advanced tax, when you make the payment, let us, for easy understanding, let us presume that you're going to make the advanced tax every quarter. So you pay 5 lakhs here and 5 lakhs again in quarter 2, and quarter 3 is 9 lakhs, and quarter 4 is 12 lakhs. So that would be 31 lakhs. Okay. So now when you make this advanced tax payment, the entry that you pass is advanced tax, you will debit and credit bank. So where are you going to group this advanced tax? You're going to group this advanced tax under asset category, because you will utilize it. Is not an expenditure for you because that has to be utilized against or knocked off against the income tax liability. It is not an expenditure for you. Okay. So now this advanced tax, you are going to the similar entry, you're going to pass it for the subsequent quarters. So advanced tax debit to bank. Okay, similar entries for the other two rest of the quarters. So now you also have something called as TDS credits. So what is TDS credits? TDS credit is nothing but whenever the customer makes the payment to the respective vendor, he will not be making the full payment for reason maybe because of the reason that he has to comply with the TDS rules, or what you call it as a withholding tax rules. Withholding tax is what is an international term, and TDS is nothing but a synonym term that is used in India. So now TDS credits. So let us say the customer makes the payment for 5 lakhs. Okay, and he deducts 50,000 towards TDS, or what you call it as withholding tax. So the rest of the payment, he credits that to your bank account. So in this case, the vendor is receiving 4,50,000 to his bank account, as well as 50,000 to his PAN account, what you call it as permanent account number. The permanent account number is nothing but the account number that is assigned by the income tax department. So this amount goes to the PAN account. That means the customer is supposed to deposit this 50,000, which is deducted at the time of payment, and he is supposed to deposit it to the PAN account. And the 4,50,000 anyways is paid through check or EFT transfer, whatever it is. So he's going to make payment to the bank account. So in this way, both the 5 lakh obligation that is payable by the vendor is being fulfilled by the, the payable by the customer is being fulfilled by the customer. So now, what are the accounting entries that you pass? Let us take up the same example. So now in this case, the accounting entry is debit bank 4,50,000, debit TDS credit, okay, and credit your customer 5 lakhs. So the customer was supposed to pay 5 lakhs. So we have reversed the customer debit balance. So we have credited it and we have debited the bank because this is the amount that we have received in the bank. And the rest of the amount is supposed to come to the company's PAN account. So therefore, this is the amount that the customer has deducted. And we presume that, and since it's a statutory norm, that the customer has to deposit this to my PAN account. So this is the entry. So now in my, so this TDS credit will also go to the, is also categorized under asset or grouped under asset. So we have one is advanced tax grouped under asset as well as TDS credit grouped under assets. So we have an advanced tax balance of 31 lakhs and the TDS credit of 50,000, right? So let us say my income tax liability at the year end is 35 lakhs. Okay, so in this case, at least I can utilize my advanced tax of 31 lakhs, TDS credits of 50,000. So the rest of 3.5 lakhs is what my net liability is. So what are the entries for income tax liability? There is an entry, income tax debit 35 lakhs to income tax liability 35 lakhs. So this is the first entry for income tax, creating an income tax liability. The second entry is to offset the advance tax against my income tax liability. So my advance tax is debited. So now I'm going to reverse this advance tax and debit my income tax liability. So income tax liability is no more a liability for a reason because to the extent of what I paid the advance tax. So the advance tax is 31 lakhs. So I'm going to reverse the income tax liability because I've already paid this amount of tax through the advance tax. So I'm going to reverse the advance tax 31 lakhs. Okay, so the third one is adjustment of TDS credits. Adjustment of TDS credit. So I have around 50,000 in my TDS credit. So I'm going to utilize this TDS credit in order to knock off my income tax liability. So 50,000 is my income tax liability to TDS credits. So this advance tax is a debit item for reason it is grouped under asset, as well as TDS credit is an asset item because it's grouped under asset. So both are being reversed. I mean to say we have credited and transferred it to the income tax liability. So in order to knock off my or reduce my income tax liability. So with this, I would like to pay the net liability, the net income tax liability of 3.5 lakhs via bank. Okay, 3.5 lakhs. Okay, so these are the accounting entries that you are going to pass against the advance tax and TDS credits that is there in your books. So one of the major challenge for most of the corporates is the reconciliation between the TDS credits and the credits that is reflecting in your income tax website. So once you log into your income tax with your income tax login credential, that is the corporate login credentials with the income tax website, you have in case of India is a form called as 26As. Once a customer deposits the tax that is deducted, that is the withholding tax or TDS tax deducted source, that is the TDS, to the government, and he uploads something called as ETDS returns, because with that he will communicate to the government that this is the amount of tax that is in favor of this corporate that I'm going to, that is what I paid it to the government. So when he declares that the return, the ETDS return, when he files the ETDS return, automatically the corporate will see that amount of TDS that is deducted by the customer in 26 days. This is a form number 26 A's. In this 26 A's, you have all the customer list, customer A, B, C, wherein whenever they have made the payment, the amount of the withholding tax or the TDS that is deducted. So in our case, it was, in the earlier case, it was 50,000 was, which was deducted by customer A, and this would have reflected in 26 A's provided customer A pays this 50,000 to the government and also files something called as ETDS returns, wherein through ETDS return the customer will convey to the government that this is the amount belongs to this corporate. So what is the corporate name? So when he communicates that to the government will upload the, automatically that gets uploaded in this 26As form. So when the corporate downloads the 26As form, it can see all the TDS credits that is deducted by various customers. So now this TDS credits as per 26A's form should reconcile with the TDS credit ledger. TDS credit general ledger as per balance sheet. So this is probably a quarterly exercise, or some companies, because of the lower number of transactions, volume of transaction, they do that year-wise. So it is not suggested that you do it quarterly. So with this, I have now completed how the TDS credits and the advance tax are set off against the income tax, and what are the necessary accounting entries, and this reconciliation process that is generally followed in the corporate. So this is about the TDS credits. Maybe in our class we can have more and more number of exercises on this. So thank you very much for watching.